Welcome to another week of finance talk with myself, Sapphire Gray. This week, we're talking about the beginner's guide on getting started as a property investor. We'll be going into more details about the landlord aspect of it, but today we're going to share with you beginner's guide on getting started as a property investor. Each week, I bring you different topics that we talk about in our finance talk. And if you like what you hear, please leave a comment, share, like, and also please leave a comment if you've got any questions in regards to our topic or any previous topics that we've discussed. At the end, I will share our contact details and you can reach out to us to learn about all the products and services that we have to offer. So let's begin this week's topic. So thinking about becoming a property investor. So you may be thinking about becoming a property investor and you've bookmarked, oh, I'm going to look for fixer-upper properties, or deep dived into the web searching for properties with lucrative returns. And you may be on your way to learning the secrets of investing. You may be focused on how you can create a financial wealth, picturing yourself in that luxury home or that luxury cruise or wherever you want to be. But then you start to get really confused and realize that, well, realistically, how do I actually do this? How do I get started? And what should I expect on this journey? Understanding your property goals as an investor is key. So before you get started, it's important to understand, is property investing right for you? Have you considered all the strategies that you could be doing or want to do? Have you niched it down to one strategy? Yes, there's a plethora of things that you need to consider if you're going to invest in property. When you're considering to becoming a landlord, it is also in your best interest if you prefer a short-term or reasonably quick return on your investment. Is it a house flip? Is it refurbishment? Could it be a suitable option for you? This allows you to purchase a home, fix it up and sell it on for a profit if you're doing a flip. For long-term investors, becoming a landlord will allow you to make money towards paying off that mortgage through the tenants, whilst the property appreciates in value. You can expect anything between 7% and upwards on rental yields. And also depends on the type of investment that you do, the location that you choose. So keep your property in good shape and you'll get the returns that you deserve. But you must do your due diligence and you must do your investigations as to the type of property you want to invest in. So set your goals. There are 4 steps to investing in the rental market. So I'm going to share those with you. Choosing the right location. Now there's so many properties programs out there that says location, location, location. Every property guru out there, investor and coaches, consultants, estate agents, letting agents would always say location is key when you're investing. To live in, it's your choice. But when you're investing and you're going to be renting it out or selling it on to other investors or selling it on to somebody who wants to buy it as a residential home, the key thing here is location. Location plays a massive role in the returns you can gain from your property. A good rule of thumb is to choose the cheapest house in the nicest area that you can afford. The market value in the area will increase over time. Finding a tenant and collecting rent will be easier if your property is in a safe area where tenants will have access to jobs and be able to send their children to good schools and their amenities are around them and transport links are around them as well. When you're looking at location, try to find it if you're going into single lets for family use, if you're going into HMOs. And if you're doing HMOs, that is a different strategy of HMO or service accommodation. You also have to look at the tourism of it as well. Is people wanting to go to that property while they're on holiday? And there's different methods on HMO, which I'd love to share these different strategies with you. So you can contact us when I give the contact details. But there is different ways that you can actually make 20 to 30% on HMOs with a different way of looking at a HMO. And I will share that with you in a later slide. Have an expert inspecting the property. Make sure that you always recruit a surveyor it's totally non-negotiable. They would allow you to know what the value of your property is, whether the structure is good on the property, any pest infections, any dry rot, any Japanese knotweed, anything like that. They were able to give you a survey on that. Plus, if you're getting a mortgage on your investment properties, your lenders would, however, want to do a survey on a property to make sure that if they're lending you 75%, that their money's not going down the drain, and that it's worthwhile them actually investing in that property, which in turn is investing in you. 3, use a pricing index service. A house price index tracks house prices trends across the UK. These sites can help you really identify residential property risks based on search areas. Using sites like HomeTrack, you will be able to get an up-to-date information just by going on there and clicking through the links that will in the area that you want to investigate. They've got different mappings of the areas. They've got pinpoint information. So use services like this to really help you navigate where is the best places to invest in and what is a good safe area for you and your tenants as well. Tip 4, having a deposit to cover the 20 or 25% on the asking price. Having a deposit around this price allows you then to look at properties so that you can get a 75% loan to value from your lenders. You could go to a finance broker who has whole of market, so they can look at the best rates for you so that you know what you're buying, you're getting the best rates, and that the mortgage repayments are going to be low. You've got associated costs with this as well. So not only do you have to cover the 25%, 20 or 25% deposit, you also have associated costs. This could be solicitors, finance brokers, renovation costs, conveyancers, anything that is associated with that. Even the lenders charge you a fee. So make sure that you've got enough money to cover not only your 25% deposit, but you also have it to cover additional costs as well. So it doesn't stop there. As well as providing coaching, mentoring, and certified courses, we also include access to download a free guide. So I've created a free guide for you, which has a plethora of information in it. I said I was going to share something with you. We'll share this in a link in the comments so that you can have access to this nice PDF, and it shows you the guide on how to do what I just shared with you today, where we continue to give you gems on how to protect your investments, the pros and cons, the rental investment business, and what to expect when you're managing a rental property. So please, if you want the guide, please reach out or download the link, and we'll be happy to share it with you. Thanks for watching us this week. It's been enjoyable sharing these short tips with you. If you'd like to contact us, please contact myself, Sapphire Gray, at info@savvywomen.co.uk, or you can go to our website, info@savvywomen.co.uk, where you can book a free e-coffee with me and have a chat and talk through what your investment desires are. I'll be happy to have that free chat with you. And hit us up on all the social media platforms, and it's 50 Savvy Women on Twitter, Facebook, Instagram, and YouTube. I look forward to sharing more finance talks with you next week.